What if the world's most powerful economies are playing a high-stakes game of chess with currencies, and you're watching the pieces move in real time? Today's story isn't just about the dollar falling against the yen, it's about the invisible war being fought in financial markets, where central banks are using every tool in their arsenal to shape the future. Let me break this down for you. Here's the thing. Japan's recent intervention in the yen market isn't just a technical adjustment, it's a signal. When the Bank of Japan, BOJ, says they're open to tightening rates as early as September, that's not just a policy update. It's a psychological weapon. Think about it. Japan has been the outlier in global monetary policy for years, holding rates near zero while others hiked. Now, they're finally catching up, but the timing feels rushed. Why? Because the yen's collapse to 40-year lows isn't just a market fluctuation. It's a symptom of a deeper problem. The entire global financial system is built on the assumption that the dollar is the ultimate safe haven. What happens when that assumption starts to crack? Let's talk about the BOJ's recent meeting. They kept rates at 1%, but here's the kicker. They now admit inflation might exceed their target. That's a seismic shift. For years, Japan's central bank has been the last man standing in the rate-cutting crowd, but now they're leaning into hawkishness. And here's what's fascinating. This isn't just about Japan. It's about how the rest of the world is reacting. The US Treasury's vague warning to banks about potential yen intervention? That's not just about propping up the yen. It's about managing expectations. Because when markets hear the word intervention, they don't just react, they panic. And in thin liquidity conditions, that panic can amplify swings by 10x. Now, step back and look at the bigger picture. The Fed's decision to hold rates last week didn't just bruise the dollar, it exposed a crack in the global confidence machine. If the Fed's new chair isn't seen as serious about inflation, then what's the point of the dollar's dominance? Meanwhile, Japan and South Korea are coordinating interventions, which is rare. Why? Because they're not just fighting for their currencies, they're fighting for their economic sovereignty. A weak yen makes their exports cheaper, but it also makes their debt more expensive. It's a tightrope walk, and the world is watching. And let's not forget the crypto angle. Bitcoin's 2% drop today isn't a coincidence. When fiat currencies are in turmoil, digital assets often mirror that volatility. But here's the thing. Crypto isn't just a hedge, it's a mirror. If the dollar is losing its luster, what does that mean for the future of money itself? Are we entering an era where no single currency holds dominance? So, what does all this mean for you? If you're an investor, this is a reminder that central bank actions aren't just numbers on a screen. They're battles being fought in real time. And if you're just watching from the sidelines, ask yourself, how long can the dollar's reign last when even Japan is starting to challenge it? The next move could be the most telling one yet. What do you think? Let me know in the comments. This is just the beginning.